Hello, Stuart Heath here, CEO and founder of Harvard Grace Capital. We're starting a new series under our Midweek Masterclass called Investment Terms That You Should Know. And I want you to know that there's a downloadable version of much more of the terms than we're actually going to cover in the videos, but want everybody to have that and get that have that available for them. So this week is the first week we're going to take the approach a big picture, and then we're going to drill down on some things over the next several weeks as we talk about various terms. So let's get very basic. Economy. What is an economy? I think people sort of tend to know, but economy is very simply put the wealth and resources of a nation, a region, or even a specific company, if we want to get down to it like that. But it's talking about what are they worth? What do they have? And what can they produce? What are their resources? So that's the economy. And when we talk about the economy, going up and down and GDP and things like that, which we'll get to, we're just talking about essentially the wherewithal of a nation. But as the economy of a nation goes, usually so do the businesses and real estate and other investment opportunities in that region. So underneath the economy is the market. They're very different things. What is the market? Well, the market can mean many different things. A lot of people will use the term the market when they're talking about the stock market, which has several different exchanges associated with it. The stock market can also sometimes include the bond market and the commodities market and the currency markets and things like that. Generally, the markets are places where securities, stocks, bonds, things of that nature are traded in an exchange. The market does not always have to be a public market. There are also private markets, and we're going to drill down on some of these terms in the coming weeks. Investing is very simply put, and I like to draw a distinction between investing and gambling. Investing is taking funds that you have and you're investing it in an asset that you think is going to grow and produce a profit over long periods of time. There are shorter term views of investing, and then there are longer terms. If you're buying a piece of land, you've got a long-term view. If you are buying a certificate of deposit at the bank, you might have a short-term view. You might just buy a 90-day CD. And there's virtually everything in between. I don't think investing includes gambling or trading, I should say. You use a lot of the same terms, a lot of the same tools and techniques. And when you're trading, you might have heard of day traders, but that's when you're buying a stock in the morning, intending to sell it in the afternoon, or sell it in the morning and buying it back to cover in the afternoon, or within a week's time. To me, this is trading. This is not investing. You're watching the market, and you're trying to make profits on the movements in the market. Nothing wrong with that. I just don't think it falls under the arena of investing. Retirement. Most of us want to retire. Usually the age is about 65, somewhere between 60 and 70. And retirement is at the point in time where you cease work and you live upon the results of your investments over time, either through a retirement plan, pensions, or other assets that you own that are providing you cash flow on a passive basis. What are stocks and bonds? Well, stocks is a representation of a piece of a company that you own. You might own a share of Google, and so you are an owner of that, one of millions. And so that is a stock, and they can be publicly traded in the market, or they can be privately held and exchanged in a private sale. What is a bond? A bond is essentially a loan. And if you're buying a bond, a U.S. bond or a corporate bond, you are loaning that organization your money, and they're promising to pay you back with a specific interest rate. And it's very much like buying a CD from a bank. When you're investing your funds into the bank, you're loaning them your money rather than the bank loaning you money. So that's what a bond is. And financing is the term generally used when you are borrowing money to buy a particular asset. Maybe you're refinancing, like you might have done with your home. And it's just the process of borrowing money to capitalize on an asset. So I hope this helps in our part one. I hope that you'll tune in. We got a lot of parts in this series in the coming weeks. And again, go to our website and get the full-blown document with all the definitions. And I think you'll find it very helpful and something you want to keep around. Thanks for watching. I really appreciate you. Thank you.